Stocks close mixed on Wall Street. A strong rally in Tesla leads the S&P 500 and the Nasdaq higher, while the Dow Jones corrects for the fourth straight session. Treasury yields cool off from their highest level in 3 months. Asian markets are mixed following mixed cues from Wall Street. The gift Nifty is also suggesting a subdued start for our own markets. Crude prices slipped to about 1% to under $75 a barrel. Gold rises to trade near record highs as geopolitical uncertainties weigh on both commodities. ITC delivers a resilient second quarter led by the hotels and the agri-business, while IndusInd Bank reports a weak quarter, missing street estimates on most parameters. Net interest margins is at the lowest level in 12 quarters, while asset quality also deteriorates. And market veterans call on the ongoing slump in the market a healthy correction. Ramdev Agrawal says the earnings slowdown is a temporary blip and expects the market to double in the next 5 years. Navneet Munot of HDFC AMC says he still sees some froth in small and mid-cap stocks. It's the final trading day of the week, and we are here with Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring this morning, and it's a mixed picture that is emerging from the Asia Pacific as well. Some macro data that is set to emerge from the region in the upcoming days. The Hang Seng is trading with gains of around 0.6%. The Taiwanese index is up 0.7%. Where are the losses coming from? Well, the losses are coming from Japan, where the index is down almost 1% now as we speak. The commentary coming in from the Bank of Japan governor ahead of their policy decision next week, where he said that they will not be hiking interest rates next week, and the depreciation of the yen against the US dollar is also causing some concern, leading to speculations of another intervention from the Bank of Japan. So for now, most of the other markets are in the green, but the Japanese markets are the ones that are trading with losses. Pull up the gift Nifty as well, and that will give you a picture of how our own markets are likely to start off. Well, currently at the flat line, it was slightly higher at the first tick and it's now slightly lower. So the implied open suggesting another start at the flat line for what has been another forgettable week for our own markets. But moving to Wall Street, then it was a mixed session there as well. The Dow Jones declined for the fourth straight day, fell over 100 points because of some earnings disappointments, while the S&P 500 managed to fend off another session of declines, rising and ending above the flat line. The tech-heavy Nasdaq also gained almost 1%, led by a huge rally in shares of Tesla, which surged 22% yesterday, which is the biggest ever single-day up move that the stock has seen since May of 2013. Now, the rally was enabled by the company's strong third quarter results and commentary from Elon Musk during the earnings call as well. Now, CEO and Chief Investment Officer at Richard Bernstein Advisors, Richard Bernstein comments on how the Federal Reserve cutting rates in a period of profit cycle is a recipe for a strong economy.
I don't think what they should do is important. What are they going to do? I think they are going to continue to cut rates, probably not as fast as everybody anticipated several months ago. But the important thing to remember here is that they are cutting rates into an accelerating profit cycle. That is very rare. Normally, they would be hiking rates into an accelerating profit cycle. Why? Because profits drive employment. Profits drive CapEx investment. And so the economy, you get the multiplier effects from the corporate sector tend to stimulate the economy. This time, you're going to get that. Plus, you're going to have the Fed cutting rates, which I don't think it gets much better than that for the economy.
That's all we have on the global market action, but how will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup is likely to look like, the stocks that are likely to be in focus, and of course the setup on the FNO side of things as well. First up, Vivek joins in to get all the cues for we need to watch out for ahead of today's session. Vivek, good morning. It was a volatile weekly expiry session, but how's the setup looking like today?
Well, you're absolutely right. Good morning to you too. Given the fact that we saw a very volatile range-bound trading session yesterday, all eyes were on how the global handover would pan out. Global handover too largely mixed, but US markets largely ended on a positive note, mainly led by the kind of strong performance that you saw from Tesla, aided by the strong commentary coming in over there. Now coming to the oil prices. Oil prices yesterday actually ended low by close to 0.8%. So now Brent futures hovering around the $74.4 a barrel mark. So that again remains a very important trigger to keep an eye out for. Yesterday, like we mentioned, what actually did well, the financials underperformed, markets ended marginally lower yesterday, range-bound trading session. Nifty Bank, largely led by HDFC Bank, was the one that managed to go ahead and make some gains. Mid-cap, small-cap end of the markets, when you're actually talking about it, they too cooled off. Mid-cap index down almost 170 points. But the biggest pain point yesterday was the consumer pack. So look at names like HUL, Colgate, all of them came out with results. Very weak set of numbers. Volume growth not as per what the market was anticipating, and on the back of that, you actually saw very sharp moves coming in over the Hindalco, SBI Life, Escort. All these companies were amongst the key drags in the broader end of the markets. What is it that we'll be watching out for today? Earnings reactions. IndusInd Bank, appears to be a weak set of results over there. NTPC, GCPL, UBL, all of them will react to results today. Quite a lot of results coming in even from the Nifty pace. So look at names like JSW Steel, SPCL, BPCL, BL. All of them will come out. When you're talking about the handover from Asia, flat as flat can be, GIFT Nifty indicating a slightly soft start for our markets today.
We keep an eye out on all of these earnings reactions. Another earnings heavy day as well. Vivek, thanks a lot for that. Over to Vinny now, who would list out all the stocks that you need to watch out for today. It's a long list of earnings reactions. Vinny, good morning.
Good morning. Absolutely a long list of reactions. And let's start with IndusInd Bank because we're expecting a bit of a subduedness given that it was weak across various parameters. Operating profits declined for the first time in 33 quarters on a year-on-year basis. So that's going to be creating some bit of a pressure for IndusInd Bank. Godrej Consumers, a decent set of numbers given that there's been a tepid demand environment. Domestic volume growth came in at 7% versus an expectation of 7 to 8%, while EBIT margins in India, that was a bit of a concern and that's seen a decline. United Breweries, good pickup seen in premium volumes, good set of numbers. Growth was mainly led by the North and West region. So a thumbs up coming in for United Breweries. Signed, that is also in focus, decent set of numbers. Revenue saw a growth of around 10%. Margins also saw a good expansion. So keep an eye on that. IEX, largely in line set of numbers. Operational update was also in line. Revenue saw around a 29% growth. Keeping an eye on that. ITC, strong performance that came in from the company, especially in the agri business, that saw good growth. Other than that, hotels also continue to see a good growth, and this is despite the high base. Margins was lower mainly because of on account of high inflation that we saw in leaf tobacco, the product over there in terms of raw material as well as FMCG inputs that saw a bit of an increase. Bikaji, good performance coming in from the company led by sweets and volume growth of around 15%. Dixon also a strong set of numbers, strong EBITDA, revenue growth also quite robust. NTPC subdued set, while GMR Airports steady performance operationally is what we saw, but net debt saw an increase. And Kansai Nerolac on the back of an entry of agreement with a company to sell their lower parallel land of around 726 crores. So keeping an eye out on that.
Vinny, thanks a lot for that update. And over to Sudarshan now, who joins in with cues from the F&O space. Sudarshan, the struggle to sustain at higher levels continue. Good morning.
Good morning, Harma. So yesterday we saw after range-bound session, Sensex and Nifty closed with minor cuts as it was well supported by financials, especially HDFC Bank. But pain continues to remain in mid-cap space. And for today also, GIFT Nifty is indicating a start with like flat start or with minor cuts. Talking about institutional flows, yesterday we saw FIs selling more than rupees 5,000 crore, DIs buying more than rupees 3,600 crore in the month of October. So far, FIs have sold almost rupees 1 lakh crore. But good news, slightly good news coming in the index futures. After so many days, we are seeing buy from FIs. FIs bought almost rupees 1,700 crore. And they have also added long contracts. They have added long contracts of more than 10,000. And at the same time, they have reduced short contracts of almost 12,000. Even in the addition of contract side, we have seen reduction in the long contracts. It's lesser than previous, like last few days. We have seen reduction of 1.5 lakh, and with this, long exposure has increased to 35%. On the client side, we continue to see addition of long contracts. Yesterday, we saw addition of 2.3 lakh, and with this, long exposure has increased to 64.6%. On the option front, on the call side, two options were active, that was 24,500 and 24,400. On the put side, 24,300 was the most active option. With this support levels, support is 24,360, resistance is 24,500 for Nifty. And lastly, stocks that might be in focus, Birla Soft and GNFC, they have come out of F&O band.
Sudarshan, thanks a lot for that. It's been 3 straight sessions now that the Nifty has been making lower highs and lower lows on the charts, and now down almost 7.5% from the record high levels. But market veterans are not worried about this, and they are calling it a much needed healthy correction. Now, speaking to CNBC TV 18, Ramdev Agrawal said that the earnings slowdown is a temporary blip and he expects the market to double in the next 5 years. Now, Navneet Munot of HDFC AMC also said that he is still seeing some froth in small and mid cap stocks, but added that while there is some earnings slowdown being seen, the balance sheets remain very healthy.
It is the healthiest possible correction and overdue correction, I would say. And even if a bit more, I feel it will be deeper the correction, better it is for the people, because the expectations were going wild. You know, some people are saying that I want only 2-3% monthly return, month on month, that too compounded. So, you know, that expectation was running wild, and once the expectations are way beyond, see, ultimately, even last 5-year return is just about 16% of the Nifty. You know, the pace of decline in the earnings is quite alarming, and their estimate this for this quarter is just about 6-7%. Even if you see the business standard aggregates, it's just about 6-7%. And so we are not seeing too many bright spots in the earnings side, and markets are at all-time high. So, you know, these are two. See, market is also dull, dead, 12, 13, 14, 15p. That matches, you know. But right now, market expectations are running at more like 15 to 20% kind of earnings growth. And here is a market which is kind of, and supply is building up.
The next 25 years look even better. Notwithstanding this correction, and we can discuss more about it, I don't think that the last few days give you any reason to worry about the next 25 years. This was expected. This is a healthy correction. There's the pace at which the money is coming. And the best part is a large part of that money is coming in the form of SIPs. And the 24,500 crores is ticket size is 23 or 400 rupees per month per ticket. And that makes us very positive about the structural aspect of financialization of savings in India.
A healthy correction from the market veterans there. Time for a short break. Up next, we get you all the key highlights from ITC and IndusInd Bank's second quarter earnings performance. Stay tuned. Back on the other side. Welcome back. On to some key earnings reported after market hours yesterday. ITC, it was a resilient quarter, and Mangalam is joining in to give us a fine print of the numbers. Considering all the demand environment commentary we have been hearing, Mangalam, how are the numbers looking like?
Well, the demand environment commentary is still tough, but the numbers are fairly resilient, as you pointed out, Hormaz. And, you know, the street was positioned for a weak set of numbers. The company actually did a slightly better shot as well, because if you look at it, the stock was at the low point of trade along with all the FMCG stocks. So cigarettes and FMCG in ITC were stable. Hotels were good. It was the agri business that really shone through. So if you look at the revenue, you know, there was a beat on street expectations, largely because of the strong performance that came in the agri business. Good performance in the hotel business on a strong base. Remember, same time last quarter, we had the G20 summit as well. Margins, however, were slightly lower on account of higher inflation in leaf tobacco, FMCG input prices, and the paper business weakness as well. So put all things together, we have the revenue coming in at 19,328 crore versus street expectations of 17,710 crores. The EBITDA at 6,335 crores. The street was working with a number of around 6,375 crores as well. And the net profit at 5,078 crores, largely in line with street expectations of 5,050 crores itself. Cigarette volume growth going at 3% versus 2 to 3% expectations is good, because it's at the higher end of the range. FMCG revenue, that was slightly subdued, and that's where the management commentary, you know, really played out. 5.5% revenue growth versus 7 to 8% expected. Hotel business, again, higher end of the range. 10 to 12% was the expectation. 12% is what the company reported. And agri, that's where the outperformance came in. 47% jump in the revenue versus expectations of just around 10 to 15%. Value-added products and leaf tobacco did a lot better. Paper was expected to decline, but at 2% still continued to be weak. That was a drag on the margins. Expect the stock to see some green, especially after the drubbing all the FMCG stocks saw yesterday.
And there'll be some relief, isn't it, after all the red that we've seen all these days. Mangalam, thanks a lot for that. The another set of earnings that came through post-market hours yesterday was IndusInd Bank, and Abhishek is joining in to give us the key highlights from that. Abhishek, good morning.
Good morning, Homa. So you can continue to see red in IndusInd Bank in trade today, given the fact that it is one of the weakest result that any bank has reported so far in Q2 FY25. Now, what has not worked in the result is that the net interest margin is at the lowest in last 3 years or 12 quarters. So it's come in at 4.08% versus 4.25% in the previous quarter. With reference to asset quality, they are worst in the last 9 quarters. So gross NP ratio and net NP ratio are at 9-quarter high of 2.1% and 0.64%. Now, operating profits have declined YOY for the first time that I am seeing in last 8 years or even more. So, operating profit growth has declined YOY by about 7-8%. And sequentially, if you see both YOY and quarter-on-quarter, the decline rate of operating profit is the highest in last 9 years or even more. Quarterly slippages are at 9-quarter high of about 1,798 crores, which is up more than 17% quarter-on-quarter. Now, bank created extra provision buffer of about 525 crore. There is no clarity why this was created. A risk weight asset to advances ratio is at 117.7%, which is the highest in last 7 quarters. A profit decline on a YOY basis and sequential basis. If you take a look, YOY it's the highest decline in 33 quarters, and sequentially it's the highest decline that you are seeing in last 18 quarters. So return ratios came under pressure. So ROA and ROE are one of the lowest that you are seeing in last 9 years or even more. So PNL, both the ANA and PAT is below Apple. So you can expect a bit of red, in trade today for IndusInd Bank. Back to you.
Abhishek, thanks a lot for that. We'll keep an eye out on both ITC and IndusInd Bank. Now, moving on, Justice Sanjeev Khanna has been appointed the 51st Chief Justice of India and is likely to take oath on the 11th of November. Now, he will succeed incumbent Chief Justice Chandrachud, who is due to retire on the 10th of November. Justice Khanna will have a relatively short tenure of just 6 months, as he is due to retire on the 13th of March 2025. Well, time for a short break. Up next, we get you cues from the commodity space. Stay tuned. We'll be right back. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'm looking at crude and gold prices, Hormuz, and both are getting their impact from the dollar index, which is headed for a 4th weekly gain. It's holding above 104 mark today in the morning as well, and that has continued to put pressure onto the prices. But even with that, the crude oil prices are headed for a weekly gain, up by nearly 2%, and this is quite an improvement after 7% of decline in the previous week. Well, even as the peace talks are on, Israel has reiterated to attack Iran, keeping markets jittery, and that has been supportive for prices. For gold as well, while we did see an all-time high of $2,758 an ounce this week, we are trading at around $2,730 at this point in time. But even with that bit of a correction, and a much-needed correction at that, we still are headed for a weekly gain. The strength in US dollar Treasury continues to weigh on. But, the monetary easing from global central banks, U.S. presidential elections on 5th of November are some of the factors which will keep the gold bulls on. So another good week that we are seeing in case of crude, gold, silver, copper, aluminum, zinc, all of these commodities are headed for a strong weekly gain.
Well, equities, gold, everybody seems to be getting a much needed correction. Manisha, thanks a lot for that, but a good week overall for the commodities market. Now, bringing you some updates from the eastern part of the country. Soon after midnight, the powerful cyclonic storm Dana has started its landfall process, and thousands of residents in West Bengal and Odisha prepared for a terrifying night. We are joined by Kamalika Sengupta to give us a rundown of what to expect. Kamalika, the landfall process has begun.
Yes, yesterday around 11:12 in the midnight, the landfall process started, and as expected, as it was directed by the told by the IMD, that the landfall took place between Puri and Sagar Island of West Bengal, and specifically the landfall took place in an area which is close to the Dhamra port, and it is a Bhitarkarnika, it's a natural park. There the landfall took place, and huge devastation, falling of trees and all these things have taken place, and gusty winds and heavy rainfall has taken place. Here in Puri also there were gusty winds and rainfall was there. Would just like to show the beach now. This was the beach where nobody was allowed yesterday. Today, some tourists are coming because some tourists were putting up in the hotel. They wanted to see the cyclone. Now, that's another aspect of this entire cyclone story. Today also, the police did a siren and miking. They are not allowing it to go very close to the sea. The sea came a little forward yesterday till midnight. Now, today, the sea is much calmer. Here, around 10 lakh people have been evacuated by the Mohan Majhi government. And also in Bengal, we have seen that Mamata Banerjee, the chief minister, she was awake all through the night in the secretaries, and she was monitoring the entire situation. There has been devastation in Bhadrak, Bhitarkarnika, Dhamara. Various trees have fallen. But the main point is that since everybody was very alert and every move was known to everyone, so proper protection, proper alertness was there in both the government, both as West Bengal government and the Orissa government. But in Orissa government also, the main challenge was this was the first exam of Mohan Majhi, because Navin Patnaik has already set a high mark that they can
Kamalika,
control
we'll have to cut you short there, but
Zero
thank you so much for sharing those updates. Some important updates coming in there from Cyclone Dana from West Bengal and from Odisha. Kamalika, thanks a lot for that update. That is a wrap on this edition of Power Breakfast. Bazaar Morning Call up next.